Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
You guys have borrowed money from local investors that you found, and you're paying them a pretty high interest rate. Why are you paying them so much money when you could just go to the bank and borrow money pretty cheaply?
Well, we found that if you can offer cash and buy things as is, particularly properties that banks don't want to finance, maybe they're not even in livable condition, you can make a stronger offer. So cash offers with fast closings help solve some problems for sellers. And that made our offers stronger. And then we could come back later with some sort of bank financing and refinance out of the private money.
And also, as a firefighter and teacher, our first property was every penny we had. And so we thought this is going to take forever to save this much cash to grow our portfolio. So this was a way to buy using private money, gave us the ability to be able to buy these properties with zero money out of our pockets. That's really what helped our portfolio grow, because otherwise it would have taken us forever with our salaries.
Will and Veronica have used a couple of different creative financing strategies to build out their portfolio. And today on the podcast, we're going to find out exactly what they've done and how they did it. Joining us on the show today for a repeat appearance from San Antonio are Will and Veronica Pritchard. We'll take a really quick break. We'll come right back and we'll talk to Will and Veronica. You probably started buying rentals for the passive income, but if you're not smart about the way that you manage your rentals, it can really start to feel like a full-time job. I want to let you know about a free tool that can help you streamline the leasing and management of your rentals. It's apartments.com. They're not just for apartment owners. If you own single families, duplexes, condos, or even apartments, you can now manage all of your rentals on apartments.com. You can find tenants, screen applicants, create leases, collect rent, and track your expenses, which makes your tax prep easier than ever. The tool is 100% online, and it's totally free for you as a landlord. With more than 75 million website visitors every single month, Apartments.com gets more visitors than any other rental website. Get started today. Go to apartments.com/RIP. That's apartments.com/RIP. A good deal on a rental property isn't going to last very long. To win properties today, you need to move quickly when a deal comes on the market, but it takes time to analyze a property. I want to let you know about an app where you can analyze deals on your phone in seconds. It's called Ask Rick. That's RIC for Rental Income Calculator. You can analyze a deal with the push of a button. You can figure out the rent, your mortgage payment, your expenses, and figure out the cash flow. If the numbers make sense, you can make an offer right there on the app, or you can send a calendar invite to your agent to see the property in person. Ask Rick is currently offering a free 7-day trial. Just search for Ask Rick in the App Store or go to Just Ask Rick. That's RIC, justaskrick.com. Let's start out talking about the actual loan. So when you borrow money from someone, you're borrowing it for just a short period of time, right?
Yes, usually we do 6 months to a year. We've got some lenders now that want us to keep their money longer, but we have to offer a reduced rate for that. But typically it's a 6-month to 12-month loan.
When you were first getting started, I imagine this was a lot harder. I mean, today you've got an established track record. You know what you're doing. Has it gotten easier the more that you've done it?
Oh, absolutely. It's gotten a lot easier as we've gained momentum. Now we have people calling us, offering, saying they would like to invest with us. So it's been really good. And I have to give credit to Will for that. He's just always talking about it. At first I was like, oh my gosh, he's like talking about it again. Like he'll talk to anybody that'll listen to him.
Yeah.
And, and he started his blog, and I'm very like about numbers and analytical and my spreadsheets. And so I was like, oh, he's writing again. And, but I think all of that has, really paid off where, people just talking about what we're doing, and we just love it. And so I think that's attracted a lot of private money.
So who are you guys talking to? Is it like friends and family mostly, or are you just reaching out to people that you maybe know have money?
No, I like to say private money found us. We had a couple of rentals, and we were growing slowly, but we were enthusiastic about it. I mean, we were talking to people, and we're just friends. Just this is what we're doing, and it's so exciting. And then friends from church were the first to ask us, "Hey, if y'all ever want an investor, we'd be interested." They had some extra capital. They'd invested in some things like movies that didn't pay off at all, and when they heard that we were considering offering loans with collateral and strong collateral, real estate that was valued more than the loans we were seeking, they were really interested. And there was a mind shift that had to take place where we went from asking, kind of timidly for less than the purchase price to realizing we were offering them a great opportunity. And once we paid them off, they said, go find us another one. So after the first deal where we asked for less than the purchase, from that point on, we asked for purchase and renovation. And all of our private lenders have been happy to do so. But I also think our experience has reduced the risk, the perceived risk of investing with us.
Do they ask for a lot of details up front, or does it really just kind of depend on the person? Like if you're talking to someone that's really analytical, they want to see the numbers, where someone that is maybe more of maybe an executive just wants to know the big picture of what's going on. Like, do you feel like you have to kind of talk to people differently based on their personality?
Sometimes. Most of ours are close enough that I really believe they're investing in us more than they are the property.
Yeah.
So it's come to the point where most of our lenders, we text them an address, what we think it will be worth, what we're buying it for, and what we're renovating. And they text back, where do we wire the money? And that sounds overly simplified, but it really is that easy with most of our lenders. We've had one or two who have asked a couple follow-up questions. And I would even say for a newbie, you don't have anyone vetting this deal other than your own numbers. Sometimes there's an argument for using hard money because a hard money lender is a little more sophisticated in this world than most private money lenders that aren't in this industry. So hard money lender is going to be more expensive typically, but they're going to vet your deal and look over your shoulder. Whereas a private money lender, it's on you to work your numbers and to make sure that you can perform for an investor that probably doesn't have the knowledge you do in this space.
Have you ever had a house that you've bought, you fixed up, and then you've appraised it as part of the refi to get your money out and pay them back? Like, have you ever not been able to get all the money back?
I don't think so. I think we've always been able to pay them off in full just from the refi, and we always have reserves. Our lenders know that for us not to pay them back, it's not a matter of this deal went bad. I tell them, if we don't pay you back, it means my family and I are eating rice and beans in a tent somewhere. We're going to make them whole one way or the other. It's not just this deal. So if we weren't to get the appraisal, we would pay them back out of our personal funds at this point. And I don't necessarily think you have to have liquid funds, but access to funds, access to loans, access to things to make your lenders whole. That is our number one priority is making them whole, happy with the experience, so they want to come back and they want to tell their friends about us.
Some of the private lenders, again, I'm sorry, I keep going back to COVID, but when COVID hit, they actually told us, don't worry about paying us. And that was just not even an option for us. We were going to continue to pay them even if we didn't get rents, which thankfully we did get rent payments. But some of them had told us, don't worry about it if right now you can't pay us. But that's just no way we would do that. That's top priority, is making sure they get paid.
I think that's really smart, because the second you don't pay them, they're not going to lend to you anymore. They're going to tell their friends not to lend to you anymore. So you really can kill your business pretty quickly and get a bad name pretty quickly if you don't treat people right.
Yes.
Absolutely.
Yeah.
Absolutely. And we believe that across the board, whether it's tenants or lenders. You do what you say you're going to do and carry yourself with integrity, and it pays off. So it's come to the point where we have more lenders than we have deals, which is a great problem to have.
Really good problem to have. And do you give them a lien on the property too?
Absolutely. They get a first lien position, and it's all done through a title company. And their collateral is always worth more than they've loaned us, even in present condition. So they have very strong collateral, and I think it's you can't ever make guarantees in the financial world or use that word, but it's a low risk, high return, which is a hard thing when you're investing your money, to find a high return at a relatively low risk is hard to find. So I feel like we offer something unique, and we don't ask for loans. We just say we're offering a lending opportunity, and it's a different frame of mind when you think you're the recipient of something versus you're offering something, and you go into the conversation a little more confidently. And we always tell people we're offering you this. And no pressure. We have other lenders if you're not interested. And usually, if they have liquid cash, they're going to jump on the opportunity.
Now, the other type of creative financing you've done is seller financing, where you've gotten the seller to basically loan you money to buy their house. So how do you approach sellers to do that?
Well, I guess we've had a couple this way, and one that stands out. It just depends on the seller's motivation. We have found that if it's a non-owner occupied property, they're subject to capital gains burden, right? Mm-hmm. So if they're having to pay capital gains and they're able to spread that out a little bit through financing it, they're usually a little bit more open to it. So the owner finance properties that we've been able to get were not owner occupied. So a lot of times people get stuck on price. And so we're negotiating deals. For example, this triplex that we bought, the listed price was like $195 and we offered $160 cash, and they came back, their bottom lowest they would go is $180. So that told me, okay, they're stuck on the number. So if you can manipulate the numbers, to where you end up with the same outcome. So what we did is we said, okay, we can do the 180 if you'll carry the note. So if you'll finance it, take payments, we can do the 180. And she accepted that because that helped her split up her capital gains burden. And it was a 1031 exchange. So it was a significant down payment. So that lowered her risk, right? It was, I think it was like $56,000 down, but then she owner financed the rest at 0%. So if we go and look at what we would pay a private lender, it ends up closing that gap. The 160 to 180, we would end up paying it in holding costs. So it ends up having a similar outcome for us.
That makes so much sense. So instead of you paying interest to a private lender, you're just basically offering the seller a little bit more money. You end up in the same place. You get the property and the seller is happy because they're making a little bit more money.
Right. And sometimes people think seller financing has to be for 30 years. It could be, in this case, 7 months, but we cranked up the payment. So that's 7 months of $1,000 a month payments straight to principal, which reduces the amount we're going to refinance or need to refinance at the end. In other words, grows our equity faster. So we have another one that did seller financing for 4 years, and we did the same thing, turned up the payment so we could pay it down fast with no interest. And then we'll have a balloon, but at that point we'll have enough equity that we have a lot of options. Sell it, refinance it, just lots of options.
Yeah.
Right.
Now, with a 7-month term, that's not a lot of time. You've basically got to start working on the refi shortly after you close. In that case, why did you do that? Like, why not just get long-term financing from the beginning? Was it just because of the price negotiations with the seller?
Yeah, it's a great question. So she wanted to sell quickly, and that made the transaction faster than us going to a bank and getting the bank financing. We also were working on the timeline of a 1031 exchange, which is 45 days to identify, 180 days to close. So for all those reasons, we wanted to get the transaction done. And so for speed, we were able to offer her the large down payment. She carries the financing. And then there's quick pay down. And then most banks, to do a cash out refinance, which is what we want to do on this, we have to have a 6-month seasoning period. So 7 months was perfect. And that was my reason for pitching 7 months. In retrospect, I wish I had pitched 12 months, but I pitched 7 and she agreed to it to get us to that 6-month seasoning. So the bank would now use the appraised value to base our loan on, the loan to value. If we don't wait the 6 months, they'll usually only lend based on cost, which is
purchase price,
what you paid for the property. So that 6 months is important for that reason, that a lot of the lenders want a 6 month seasoning before they'll do a cash out refinance.
If you want to hear more from Will and Veronica, they've been with us twice in the past. We first met them on episode number 187, and then we did a follow-up about a month ago on episode number 308, talking about how they doubled the size of their portfolio. If you want to reach out to Will and Veronica, I've got their contact information on the website. You can find it at rentalincomepodcast.com/Will, WILL. Thank you so much for listening to this bonus episode of the Rental Income Podcast. We'll be back with a new episode on Tuesday. My name is Dan Lane, and this has been the Rental Income Podcast.